We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger.
So we're trying to take this technology from Bitcoin and the digital asset industry more broadly that's kind of been battle tested over the last decade or so and apply that to traditional capital markets.
Tokenized shares emulate cryptocurrencies, meaning that there are fewer regulations around buying and holding them. This widens the market of potential shareholders and gives the company an opportunity to engage with more investors.
Ticker symbols on the internet are like steam engines. The tokenization of stocks on blockchain is like a bullet train. It's faster, it's cheaper, and it's safer.
Many of you live in countries where it's expensive and difficult, if not impossible, to buy stocks on the American stock exchanges. Now that they've been tokenized, you can buy them anywhere.
Welcome to the Money Panda, hosted by Elvis Kolawole.
Hello, 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 hello. You are welcome to the Money Panda. And today I have a really, really special guest on the show. Today I'm talking to Matt Eisner. And Matt is the head of product and growth at Dinari. And I think the only thing I knew about the Dinari was the fact that it was a currency in the Middle East or something, or it used to be a currency or something like that. And it's beautiful because Dinari is a product that that tokenizes stocks and other traditional financial securities. And Matt heads growth and product at this startup. And today we are going to talk about tokenization, especially in the context of securities. And thankfully, Matthew is a person who has quite a lot of experience in the world of tokenization, especially as regards real world assets and putting things on chain for quite a long time, much longer than I have. And that's something I'm really looking forward to talking about. So Matthew, how about you introduce yourself, tell us about your background in the Web3 space and what life is like with Dinari currently.
Sure. Yeah. Thanks very much for having me on. Great to join. So I guess the background that's important in this space is, so I first learned about Bitcoin in 2009, actually.
Whoa.
One of my friends at university was mining Bitcoin on his laptop and mined like 25 Bitcoin. And I kind of wrote it off, and then some other friends started to mine it, and I was like, I'm not really going to do this. But some of them mined up pretty decent amounts, and eventually one of them started an on-off ramp. And so like 2012, 2013, I did a little bit of work for that while I was wrapping up school, and never got paid. And then so left. I was like, screw blockchain. This is a scam. And came back, maybe went to work in startups in San Francisco and then London, and then more venture investing side of startups, and a lot of it's kind of a corporate partnership venture capital program. And a lot of the corporate partners in the UK were banks, and a lot of them were really, really interested in blockchain. So I started to get back into the space in 2016, 2017, and then did some work around marketing, growth, token sales, token distributions, things like that for Radix, for CoinFirm, a few other firms like that, and also helped kind of boutique advisory fund set up. And so kind of got to see things like the early days of MoonPay, pre-MoonPay, and all sorts of stuff like that, which was pretty cool.
Wow.
And then as I continued to do that, but then as pandemic kind of came close, I actually joined up to a big IT systems integration consulting firm called NTT Data. And they were very interested in, one, just kind of how do we take early stage startups and bring them to enterprise that are our clients. But two, as blockchain was kind of getting hyped again, a lot of the attention around these enterprises turned toward how do we use blockchain. My role as venture investing, kind of in that role, kind of diminished a lot. We got our budgets cut in COVID.
Wow.
And I had a lot of free time. And so the projects I was doing at NTT were around concepts like digital twinning or NFT membership and loyalty programs or things like that. And then on the side, I was actually running Algorand's accelerator program, and I kind of helped them design that and set it up with some friends of mine at Eterna Capital. And so ran that for about a year and then advised that afterwards. But one of the startups in that program is, I mean, now one of the big players in the RWA tokenization space. And then from there, worked on a few other Web3 projects that were not so much focused on tokenization. And then maybe 6 months or so ago, found myself at Dinari, which is, I mean, obviously on a kind of forefront of tokenization. If you, I mean, even look as recently as what Larry Fink was saying a couple of weeks ago around tokenizing RWAs and on all assets being the future, we found ourselves in a pretty interesting position where a lot of attention has turned toward us while we've been kind of flying a bit under the radar. But yeah, it's a pretty long background in tech, blockchain, as long as kind of is feasible in tokenization, because I mean, 4 or 5 years ago, a thing. But yeah.
It definitely wasn't a thing. We weren't exactly thinking about instant settlement or, you know, like a lot of the concepts.
Well, and people were talking about it from the concept of security token offerings, STOs, but they were very premature. They were really concept in the way that I don't even know what would be kind of the equivalent now that's like that forward thinking. I'd say I'd compare it to like what ZK proofs were maybe like a year ago. Something that was really early, but now, and they've been rebranded and they're now RWA. But so the idea was there, but something where, I mean, that first started emerging at the end of the 2017-18 bull cycle as like a future narrative, not something that people were really had any deployed solutions for. And now there are, I mean, there's bonds, there's T-bills, there's, I mean, us with stocks and equities, there's people working on private market shares. So all sorts of interesting use cases in RWA that people are pretty actively building and have deployed assets for.
Wow. Okay, so that's a nice segue. So first things first, I think there are the talking points on what I say theoretical level, like how it could actually affect, you know, traditional financial securities, like debts, you know, bonds, the usual equities, the stocks, and the ETFs, for example, that Dinari does. But like, what does it look like? What does it look like holistically? I'm just talking like for the entire, would I say, market of financial securities. Like, what do you feel could be the lasting effect of tokenization, like broadly?
So, I mean, I think at the most basic level, it's access, whether that's to basic assets themselves or to financial services on top of them. There's a few different types of users that access is different to in terms of what that means to them. But I'll just say it really opens up access to, at the first primary level, regions where it's difficult to invest in US assets or assets across border assets in general, or where there's large unbanked populations that have trouble getting bank accounts, even where there's basic currency fluctuation or kind of local market fluctuation and people want to insulate themselves from risk. So that's, I mean, one approach. Another is, I mean, and a little bit premature for this, but the kind of horizon is yield based off of these RWAs and actually having some sort of access to what in tradfi does exist in terms of borrowing and lending of assets and shares, and basically making yield on those, but something that we can eventually enable in the RWA space on chain, but there's certainly some regulatory and legal questions.
I'm sorry to stop you. I was just like, doesn't that already sort of, like you said, doesn't that already sort of exist in TradFi? Like, why the need to tokenize just to access further finance? Like,
so part of it is that a lot of that is only open for whole share or like whole asset solutions. So if you're talking about stock lending, a high cost asset, you're potentially looking at and that's even, I mean, holds true to the basic asset for that asset. I mean, if the baseline share fractionalization, or like if you can't fractionalize the share and the base share is thousands of dollars, then that's prohibitive to a lot of people. And then those services are almost never fractionalizable. You find fractionalizable trading on a lot of platforms. You don't find fractionalizable lending or lending with any control on any sort of retail platform. Robinhood does have a stock lending service, and if you subscribe to their premium service, I think you get a better rate on it or something like that. But all to say that you don't have any control over how you lend the stocks in that scenario. It's really not transparent at all. And something where in the realm of, I mean, if you look at how people have gone in the direction of like liquidity pools and dexes, people have very, very advanced solutions for that, that frankly are probably more advanced than their tradfi equivalents. And currently, those solutions, just one, aren't available to users at all in the way that dexes are for RWAs in terms of in yield on RWAs. And two, there's probably a lot more depth and creativity that can be brought to the table by developers in the blockchain ecosystem who are potentially looking to build instruments on top of these. And we don't really speculate too much about that. I mean, I think we'd like to stick more in the kind of legal infrastructure, TradFi to Web3 bridge, that kind of areas is more of our wheelhouse. But certainly something where we want to be facilitating creative solutions that developers want to build that can enable yield or things like that. But there are legal questions around that, especially in the US. But all to say, things like collateralization becomes a lot easier for a virtual asset, for an asset that's kind of on-chain native in ways, shape, or where there's, I mean, really, really stable infrastructure to show the relationship between the TradFi asset. And all those things can basically facilitate yield at the end of the day is what people are looking for.
Yeah, as regard yields, I think to a certain level, I think the reason why yields aren't a thing that's very democratized is because of the protections for sophisticated investors, or sorry, accredited investors. I think that's what they call them. And I think that's definitely there for protection of investors, or at least that's what they say it's for.
Well, that's, I mean, why you see everyone getting so excited about the Bitcoin ETF was because that's the first time. I mean, I have friends who are hedge fund traders or wealth managers, and they, I mean, basically now for the first time can buy Bitcoin on behalf of their clients because they can get it insured. And there'll be, I mean, they like Nexus and other on-chain and insurance DeFi solutions that are pretty interesting. We'll certainly be, I mean, looking to try and plug in with those, although those obviously still aren't up to the standard where most businesses that aren't looking to take really significant calculated risks in blockchain or are just completely Web3 native. Most businesses aren't going to touch those. And we very much believe that the business will be part of what drives kind of on-chain adoption and kind of blockchain and cryptocurrencies becoming something that become a household's daily used transaction mechanism.
I think I could go into this like all day, because another question that keeps coming to mind is, you know what, I think like that's just like, I'm just thinking like product questions, stuff like, you know, what happens to, would I say, immutability, and like what sorts of asset classes would
so immutability is a great point to raise, because actually I realized I didn't really touch on the fact that, I mean, the other thing that we really look at in terms of what blockchain enables with RWAs versus TradFi is transparency and kind of control, security, fairness, however you want to kind of call it. But in theory, you should have, I mean, we don't take any fees on spreads. We take them based off of trading volume because we prefer to have a market that is fully transparent, that is fully kind of optimized on the market level, and then we can charge a transparent fee. That's not the way traditional finance works. It's before orders and then in brokers and stuff like that.
Wait, before you go on, like, hold up, like what? I didn't actually realize this, but what does Dinari actually use? Like, does it use a private blockchain or it's a regular blockchain?
So we're on Arbitrum 1, and then we'll expand to Ethereum relatively soon. And then probably look at 2 to 3 other chains before the end of the year. But so we might, I mean, eventually look at private blockchains for like advanced data use cases or kind of special purpose reasons. But I mean, for the core chain itself, one of the reasons why we wanted to build this was basically to have a transparent log of how people are, it doesn't, and we'll have to determine how much detail is put on chain, but at least of the transactions themselves, of the issuance and purchases and sells, having that on chain is a pretty significant step in transparency, where the
Yeah,
is layers of brokers between you and where you can actually make a trade.
yeah. And now all of a sudden, like for like in this instance, I just realized, oh yeah, this is why so many people are slow to adopt this, because I'm just wondering like if the world is ready for that level of transparency. I think a lot of things thrive in darkness. You know what I'm saying? There are lots of
Oh,
prices that
definitely.
thrive in darkness. So
Which is the irony of I mean, how regulators talk about blockchain as this like money laundering tool, and like really, as soon as
yeah.
there's a dedicated effort to actually like tag everyone and ID everyone on the blockchain, or at least where they take their money off chain, like I mean, that's not going to be true at all. But I mean, something where as it stands now, we're not, I mean, doxing anyone in how we display their orders on chain. It is, I mean, pretty, I'm not the one to speak on the
Yeah.
on-chain data that we currently display.
Yeah.
But something where, I mean, it's pretty purely around the trades themselves, more from a market transparency standpoint than this individual is holding this asset. Like we're not, I mean, you can go and look at someone's wallet and see what D shares they're
Uh,
holding. But you can do that with any other cryptocurrency as well.
wow. Okay. I was gonna make some jokes, but I'm not gonna do that. I'm not going to get myself booted. I was thinking about like some politician like moving their D shares and whether like
I
that
mean,
would count
the fortunate
as a
part about the
disclosure.
politicians, at least, is they're, at least in the US, they're required to report their assets and like how they
Yeah,
trade.
but they
And you
wouldn't.
have, I mean, the unusual whale ETFs of Nancy and Cruz that like
I
basically
didn't
track
want to.
their
I don't want
portfolios.
to mention her name.
I mean, I'll do it. I'm American. They can't do anything to me. I hope. I mean, they shouldn't. Well, I got it. That's a whole other conversation that we're not getting to, I don't think.
Yeah. I feel you, but man, it opens a kind of worms, doesn't it? And like sometimes when I think about it, that's why I understand why like there's an incentive to perhaps slow it down, even though like the operational efficiencies are there. Because why would you want like several layers of brokers, several layers of technology between user and assets if there are not incentives like this, so yeah, it adds up. But then let me bring it to another topic. Let me shift a little bit. So aside from these financial securities, what other industries do you feel real world tokenization could really take over?
So yeah, I mean, I think real estate is a very interesting space for this. I mean, you see quite a few companies, Lofty, Frac, I think Parcel, um, a few others that are working on, I mean, ideas of tokenized real estate. It's very difficult though when you tie in a physical asset, because you have to manage the transfer of ownership and the physical asset itself. And if it's a shared
Mm,
asset, then maintenance. I mean, I think you're going to see, and you already are seeing it in a lot of DAOs, like the problem of governance and like the
mm.
problem is always lagging. Like governance is almost never ahead of problems. It's almost, and like maybe at the beginning, but like pretty quickly it gets behind where it's reacting to things. It's not kind of planning
It's
ahead
not,
most of the
yeah,
time. And so if you're talking about that with something like a house that you're renting out, where if you don't get maintenance to the renter in like 24 hours to fix the heating, then like you violated the terms of the rental agreement. Like that's an issue, and that can be, I mean, certainly you can build rails and infrastructure for it, but all to say there's going to need to be a lot of rails and infrastructure for it. And I think you'll see
yeah.
a lot of those focus on really specific use cases or really specific user types, or they won't allow fractionalization of that asset at first in the beginning. I think you'll see similar things to like, how do we manage like fractional ownership of, so art is another interesting one. There's a company called
Mm,
Art that went through the Algorand accelerator I was in. I know there's a few other ones like that. I think
hmm.
Mastercraft or something like that even
Yeah,
allows like
that, yeah.
version of this. I don't think they're Web3, are they?
I think they are. I think I was
Okay,
looking it up
maybe.
there,
I
but
know a lot of their early marketing, maybe this was Twitter, was was kind of not allowing this, was they kind of hid the Web3 part, which also when you're looking at like more consumer use cases, like there's also sometimes no reason to say it's Web3. But yeah, I didn't, because all their Twitter ads that they were targeting me with were just like, yeah, buy fractional art as if it was stock. So yeah, I mean, I think you'll have struggles where some of like, it'll be how do you like manage the ownership of the physical object, and like there'll be conflicts about that, and I think like it's going to take a while for those to like truly resolve. We really like where we are with public securities because it's pretty transparent in terms of kind of how you would go
Expectations.
yeah, and it's pretty, I mean, the one thing that we don't do is we don't do voting rights, because that's something that likely gets us into hot water with the US government. Like the US government wants control over US companies, or they want us to stay in the US. But we do dividends, which most platforms don't do in terms of international trading. We do fractionalization, which some don't do, but a lot do now. And then we have, I mean, the transparency element. We don't take spreads. We do all these other things that make that compete. We actually started though as a private equities platform. So 2 years ago, we started building this out more for kind of shares in companies as they started to grow, and you would want to manage secondaries and potentially the exit eventually. And we built a lot of the legal infrastructure for that and a lot of kind of the tooling for that, and then realized that actually this is going to be a lot harder than going after public equities, and it's probably a lot less sexy as well, because a lot more people are working on this idea for blockchain. I had actually worked with a product for a while that I ended up investing in that was working on that and then pivoted. So I'll just say it's really, really hard from a regulatory standpoint to do that. And so something where maybe I think a year and a half ago, we realized we had a bunch of this tech shared and so spun it out. But I think people eventually will work on, I mean, private market shares as well. But all to say the legal lift there is going to be much, much heavier. I can see that. I think there's still probably going to be some components that need to be done by someone manually, specifically a lawyer or a finance person. And so they'll have to be like mechanisms built in that basically like automate the bounty of that task, and like then have validators approve that task. And so like the layers of that for such a niche application are like, people aren't really thinking about that yet. So it might be like a business that manages this on a blockchain, but yeah, I'd say a fully decentralized, and we're not fully decentralized either. I don't think anyone really is ultimately. Even Ethereum.
Okay.
I mean, if you want to be like perfectly like true decentralization,
I know. No.
Okay, we are. I mean, we certainly probably now probably lean more CeFi than DeFi. But all to say, I think we'd like to move more toward DeFi, and something where to do that in a compliant way requires a lot of tooling, and there's a lot of complexity depending on the type of real world asset that you're looking at.
And it's the legal stuff that bugs me a lot, like, because I think like that's where lots of, would I say, foul play can happen. And that's where like lots of protections are usually needed. And that's where the stifling of innovation is, because like you said, nobody wants to go through the headache of wondering, okay, what parts of this process will be automated, what parts would be, signed off by some physical person, or what new jobs will be created, what jobs will be eliminated. Nobody wants to. I don't know. Nobody wants.
Well, I think you'll see a similar progression to how you saw this in like more like traditional DeFi, like traditional DeFi financial services. First, there was a swap function, and then people built liquidity managers on top of that, and then people built yield managers on top of that. People built like derivatives and lending and borrowing and leverage and all sorts of stuff like that. Well, the order of that maybe is a little mixed up, but all to say, like, it was a layering of infrastructure. And I think we're still, I mean, very much at like the tier 1, tier 2 infrastructure of just getting the assets on chain in a way that's
we're still early.
These assets are more complicated than like truly virtual, like protocol tokens, or I mean, USDC really, if you think about it, is the first RWA. It's an RWA of a currency. But all to say, I think the RWA hype right now is equivalent to like the AI hype like 2-3 years ago. So I think RWA comes back in the next bull cycle with like real. I mean, I think you have the basic assets there, but I don't think you have really the applications in the way you now have ChatGPT. Like
Yeah.
people are building it and people are excited, but the people who are investing in it and like excited about it on crypto Twitter, I think more often than not are excited about it because they're
Yes.
chasing the narrative, and there's a bunch of projects that say they're doing this with tokens and the tokens likely aren't compliant. They're not doing it in the US, which when you're doing it with US companies, that's probably going to become an
It's
issue
a
eventually.
complete different
Um,
matter. Yeah.
so I'll just say, I think like there's that layer. I mean, there's other people who have been working on stuff like this for ages and have been doing a very good job. Most of them are focused more on like more straightforward or more like specific assets like T-bills, like currencies, like things like that. And I think those are there and those are starting. I think you're seeing the first layers of like solutions on top of those. I should say second layer, because you have that whole financial services aspect that like is pretty like lending and borrowing, all those ones. But I think you're also getting like a more creative, like people are starting to think about how do I do complex, and like so there used to be that, I don't even remember what the protocol was, but there's some protocol you could like distribute regular payments through. You could say here's a pool of money and distribute payments every week for whatever. People are starting to think about more advanced applications of that, and all to say those are the types of contracts that you'll need to get to in RWAs and managing, like, okay, how do we do like payments with conditions to multiple people based off of like some sort of on-chain data or some sort of data source that we trust, et cetera, et cetera.
Yeah.
And that's the level of like intricate, interrelated, like composable contracts that will be, or interoperable composable contracts that will be in place to facilitate the environment where like you actually have like 3 or 4 real world people engaging in this process of the transfer of a real world asset. I mean, I think homeownership is another great one, because when you're buying or selling a home, you have an inspection, an appraisal, you have 2 realtors. I think probably 2 or 3 of those maybe get disintermediated or are done in a much more light touch way because of this. But if you look at, I mean, the 2 biggest industries that are sort of making money off of lack of transparency, it's real estate and financial services. And you just had the US government come down on real estate and basically say, like, what is it? It's like a $5 billion settlement or something like that or like, I should
For
actually
what?
look. It was for the Real Estate Association of America for basically like kind of running like a price fixing sort of thing that was, let me see, real estate.
Yeah, like a cartel.
I don't know if I'd go that far. What is this?
Is it like Diamond Cartel? So sort of like
Well, basically, I think they were like, okay, yeah, National Association of Realtors ordered to pay $2 billion penalty. What was this? Artificially inflating home prices.
of course they are. I
Oh no,
mean,
oh wait, keep home sale commissions. Yeah, to keep commissions high, which is probably by keeping prices high.
yeah, of course.
Oh, sorry.
Yeah, I said of course. I mean, if you've seen the prices of homes in America, no one would argue.
Yeah, but I'll just say that you're paying for the broker, the middleman, and the broker middleman provides something valuable. I mean, these are very, very complex processes. They're processes you want to be insured, that if you don't do everything right, you're screwed on. But they're also processes that, I mean, everything else, we've automated calling a taxi cab. Like that's a pretty trivial one in terms of value added and extracted through automation, or that's given back to people because they don't have to pay those fees.
Okay, hold on.
The level of complexity is
Wait.
wild.
Yeah. So wait, hold on. Before we go forward, I think I took on the question, but I wanted to just get your take on just one thing. Just could you mention one industry, just one industry aside from financial securities, you feel tokenization is a shoe-in to work for?
So I mean, are we wrapping real estate into financial services? I guess, because I would say eventually real estate will be it.
No, I think real estate is its own thing. Yeah.
Okay, I mean, I might say real estate eventually, but I'd say that's, I mean, 10 years off realistically, maybe 5 if we're lucky. Just because the legal side of that needs to catch
the legal
up.
side is crazy. Yeah.
I think identity, I mean, I wouldn't, it's hard to call that real world assets sort of, but I think people's attention, people's consciousness, people's data is going to become more important, especially as like automation, robotics picks up and people have less traditional jobs. And I think that eventually identity and attention will be considered assets, and will, like, I mean, I don't know if they'll be tokenized necessarily, but I'll just say that you're, I mean, you could look at WorldCoin as like the first basis of this kind of, and that's kind of actually the last company I was at before Dinari was a ad tech, like a big ad tech company, and we were working on the idea of aggregate all your data and set permissions and monetize it via like selling it to advertisers or whoever you want to, and eventually earn tokens for it. And that was something that, I mean, we saw that as this is probably universal basic income in the future. Like this has, and like the most valuable thing, probably half people in the world are doing it at some point when robotics are, I mean, really doing everything, is like responding to ads and like marketing and basically like providing their humanity.
That sounds dystopian.
It's dystopian.
It sounds like an episode of Black Mirror, but hey, I guess this is where we are right now. That sounds crazy.
All the episodes of Black Mirror are scary in no way like ever going to happen until like something happens. Like, wait, this was in a Black Mirror.
Whoa, that's a little crazy, but it is what it is. So okay, for me, I was gonna ask you what industries you feel are terrible, or sorry, maybe not terrible, but definitely not exactly the best fit for tokenization. And for me, I think real estate might be up there, maybe because of the legal parts.
I think that's definitely true right now.
Yeah.
I think public or private securities also is just much more difficult because there's a lot more cross-border regulation to deal with. One of the nice parts about public securities is U.S. public securities are 75% plus of traded public securities because the derivative markets are built on U.S. public securities. So something where international investors are trading U.S. assets at a much higher rate than, I mean, most other countries' markets, as well as think about like private equities. I mean, one, those don't get traded very often. Each private equity is different. Each private equity is managed by a different country. It's very case by case there. So I think that's, and we, I mean, as a company, think that that's a particularly difficult area to do, although it's one that we would love to see done. Republic also is probably in a pretty good place to do that when they want to, but they've only done that with their note so far. So I'll just say that's tricky.
What's the name?
Republic.
Republic. Okay, never heard of them. But
so they're I mean, big company in the US that does, they're kind of like, I think they bought Cedars maybe. But they are the same thing as Cedars, which is more like Europe, like Europe, rest of world oriented, that is kind of crowdfunding, like equity crowdfunding. And then they spun out basically a token that gives access to their port, because they would take a small take in every company that came through the platform that they liked. They basically launched a token that's now on chain that basically gives you access to like a share of that portfolio.
Wow. Oh, interesting. I think I agree with you. You know, private equity, I don't know. Like I'm not very sure like how I would feel if, for example, an entire airport was represented by a token. You know, like
actually one of the cooler, and I don't know, I think it's hard, but I think it's a hard idea to scale. It's probably an easy idea to do like on a one-off basis, maybe. And I don't know really how far you do scale this, because you'll get when I talk about it. So I had a friend who was telling me that like he had some friends who were working on a really cool RWA application that was going to be buying a shipping boat, like a shipping vessel, like a container ship, which like maybe is like a little easier than real estate in some ways. I don't know. It strikes me as similar though, and like the complexity of like managing a crew for that ship.
I don't think it's easier.
Operate that ship.
I don't think it's easier.
Anything where you have to actually operate the asset on an ongoing basis is really difficult. That being said, that's like I have personal like passion ideas of things like that.
Yes, because
they're some of the more exciting ones. They're just some of the ones that are harder to do now because basically we're still just getting the assets on chain, let alone figuring out how to deal with transfer and ownership and
Yeah.
maintenance and things like that.
In the case of ships, like they're very complicated because like some ships are like domiciled in like 3 different countries, like in a whole like mishmash of legal mumbo jumbo. I don't know how that works,
I
but I
didn't
think
even know
there's
that. I imagine that makes
yeah,
it.
yeah, but I know that like one company usually owns the ship, the crew is from another country, and it's usually like this whole clusterfuck, and I don't know how that's going to work out on chain. So so
Yeah,
I
no,
don't
no.
know. Yeah. So, anyways, I think you're right about that. And oh my, it's a really exciting. It's a really exciting world and an exciting thing that we're going into. And I can't wait for many more projects to come through and try to solve these problems, whether it's for ships or for real estate or for private equity, shit, maybe for airports or stuff like that. So.
Actually,
So
another
yeah.
one I've heard that I thought was pretty interesting was like carbon credits. But there's a whole other, like, even just the concept of tokenizing carbon credits is really difficult because it's a space that's ripe with
Yeah.
misinformation, misreporting, in like misalignment of incentives. But something
Yes.
eventually, I mean, like if the infrastructure there for the assets themselves gets better, and even like the Web2 reporting on those assets, like that could be something that becomes very, very interesting as a way to, because there's not really a market for it that exists. And so if the market for it becomes that emerges is decentralized on chain, then that maybe is what drives enterprise on chain, is trading carbon credits.
Yeah, yeah. Maybe that's exactly what could happen. I look forward to more exciting stuff, I guess. Anyways, thank you so much, Matthew. Thank you so much. We're at the end of our pod. Thank you so much for coming through. Thank you so much for this time. I really, really enjoyed this chat. And for everyone still here, this has been Matthew Eisner, the head of product and growth at Dinari. And we've been talking about tokenization with a bit of a bias towards securities, I believe.
A little bit.
Understandably. Yeah,
No,
and
no, definitely.
yeah, of course. And Matthew is involved with Dinari, which is a platform which is aiming to tokenize stocks, ETFs, REITs, and similar financial securities. And you can look forward to many more episodes where I talk about tokenization from the angle of different sorts of assets. In the meantime, thank you for listening to the Money Panda, and see you on the next one. Bye bye.